So you've tried 5-minute scalping, right? You know that feeling. It's just a whole lot of chaos, a lot of noise, and maybe a little bit of hope. But what if we could swap that chaos for a crystal clear, repeatable system? Well, today, we're going to break down a simple two-step strategy that cuts right through the market noise and shows you exactly when and where to look for a trade.
Does this screen look a little too familiar? You see a quick spike, you think, this is it. You jump in and bam, the market immediately reverses on you. It's a super frustrating cycle, and it happens because most people are looking for signals in all the wrong places.
Well, that's what we're here to fix. We're going to take all that random noise and turn it into a dead simple two-step formula. And the best part? It works on crypto, Forex, indices, pretty much anything you trade. By the end of this, you're going to have a completely new way of looking at your charts.
Okay, so let's dive into the most important part first, which is step 1. And here's a little secret for you. The key to winning at 5-minute scalping doesn't actually start on the 5-minute chart at all.
This right here, this is the light bulb moment for so many traders. Your real edge, your advantage, it's not hiding in that 5-minute chaos. It's found in the clarity of the bigger picture. You have to know where you're going to trade before you ever think about when to trade. So to find that where, we have to understand a concept called liquidity. Now, don't let the fancy word fool you. Think of liquidity as the fuel for the market. It's just those key zones on your chart, like old highs, old lows, or price imbalances, where price is naturally going to be pulled towards. That's where all the action is.
So what does this actually look like on your charts? Well, you start by looking at the daily, the 4-hour and the 1-hour charts, just to get your overall direction. Then you mark off those key liquidity zones. These become your trading arenas, the only places you'll even consider looking for a trade.
All right, so you found your arena on the higher time frame. Once price finally gets to one of those spots, we can move on to step 2. This is our specific entry trigger. The signal that tells us, okay, it's go time. Pay attention.
We call this signal a CISD, or a change in state of delivery. And I know, that sounds super technical and complicated, but honestly, just think of it as your final green light. It's a confirmation signal that pops up right after the market takes out some liquidity at your key level. It's that simple.
So here's the exact sequence you're looking for. It's like a little recipe. First, price has to arrive at your key level. Second, you got to wait for what's called a sweep. That's a quick move that grabs liquidity and often traps other traders. And third, you see the price break that CSD level. That's it. That's your confirmation.
Theory is great and all, but seeing how this works on a real, live chart, that's where it all clicks. So let's walk through the entire process together from the big picture all the way down to that 5-minute entry. For this example, we're going to look at a crypto pair, Astera/USDT. Remember, the whole setup begins on those higher time frames, but the final execution, the part where we actually click the button, that's going to happen right here on the 5-minute chart.
First up, the big picture. You can see how the market structure is already broken to the upside, which tells us the bulls are in control. Now price is pulling back into a key level we've marked out, a 4-hour fair value gap. This is our arena. This is where we expect buyers to step in.
Now here's the crucial part. We don't just blindly buy the second it touches our level. Nope, we wait. Why? Because as this quote says, price needs to create a swing point. It needs to do that liquidity sweep first. This is the market tipping its hand, signaling that a reversal might be coming.
And there it is, right on cue. We get that liquidity sweep right at our 4-hour level. Then, the CISD level shows up on our chart, and the moment price breaks and closes above that level, that is our trigger. The system is screaming at us that the buyers have taken control. So with our confirmation in hand, let's jump down to the 5-minute chart and see how we build this into a real actionable trade plan. It's all about precise execution from here on out.
Okay, here's the game plan. Our entry is going to be at a new 5-minute fair value gap that was created right after that confirmation break. Our stop loss? That goes safely just below the low of that big sweep. And our take profit? We're aiming for the next obvious pool of liquidity sitting right above us.
And there you go. The plan is executed just like we drew it up, and the trade smoothly hits our take profit target. No guesswork, no emotion, just following a clear 2-step system. It's beautiful, right?
So, after seeing all that, what's the one thing you absolutely need to remember? It really all boils down to a super simple, repeatable logic.
Let's recap it one last time. Step 1, find your high time frame arena. Step 2, patiently wait for a liquidity sweep inside that arena. And step 3,
You only execute after you get that confirmed CIS-CD break. That's the whole playbook.
You know, the real magic of this strategy is the discipline it gives you. It turns you from someone who chases random market moves into a patient hunter, waiting for those A-plus setups to come right to you. Yeah, you might trade less, but you're going to trade so much smarter. So, I'll leave you with this question to chew on. Take a good, honest look at your own trading. Is it a clear, methodical process like this one? Or is it kind of based on feelings and guesswork? Because having a system, that's what separates the hopeful traders from the consistently profitable ones.